Hello everyone, this is Mayank and welcome back to my channel. So today we'll discuss about 5 stocks which are good for compounding. We'll see their past records, what they do, what kind of business they are in. And based on that, we can create a portfolio for these five stocks. So I'm keeping an investment amount of 50,000 for it. You can change your investment based on whatever your savings or whatever your plan is as per the stock market investment. But to get any sizable return, I kept the investment portfolio amount as 50,000 rupees. So we'll jump into discussion, but before I jump into those things, two discussion first. First is disclaimer that this is not recommendation. Any stock we discuss is not recommended to buy or sell. You can do your own research before making any investment in any of the stocks discussed. Second thing is that if you find the video helpful, please like the video so that this get recommended to more and more people and we can spread the word. So let's jump. The first stock what we can discuss today as part of this video is ALKYLAMINES. So ALKYLAMINES is a global leader in ethylamines. They have more than 100 plus products and most of them are done by their internal R&D team. And because of this, they have a strong R&D team which works on the products and all, which are their proprietary products. Now they are investing a lot on capacity expansion, and the plan is that the expansion, by virtue of it, their capacity will increase by 30 to 40% in the next year by end of 2022, and they have 90% are exports and 10% is revenue comes from India. So this is on brief level. Sales growth, if you see from numbers perspective, for last 3 years it's 26%. Compounded profit growth for last 3 years is 66%. Stock price CAGR for 3 years is 115%. For 5 years 81%, and 10 years 67%. That is huge. If you see CAGR, I mean, I clearly told it's how much you can return every year the stock price. So it's 3 years, every year it has returned 115%. For 5 years, last 5 years, every year it's given return of 81%. That's a huge compounder for any investor for this company. What is other good point is that the cash conversion cycle has reduced a lot. If you want to understand what is cash conversion cycle and how it impacts the balance sheet of the company, do let me in the comment section. We can create a video on this particular item like cash conversion cycle and few other things also which are important for the understanding the balance sheet and impact of it. Another important point is this company is almost debt free. So they have some debt, but the kind of cash equivalent what this company has, that makes this company as a debt free company. Important figures, if you see in terms of sales growth 2018, 19, 20 and 21, if you see the sales has been increasing every other year, and same goes for profit also. You can see this in the graph, the numbers are present over here. If you see the financial statement also, so total revenue from 2018 to 2021 it increased from 621 to 1249, almost doubled. EBITDA of 121 to 436, it's almost 4 times, 3 and 3.7 times. Profit before tax from 105 crores to 407 crores. So 105,000 crores to 407,000 crores. So that's a huge amount of money. And earning per share from 12.92 it went up to 57.9. So it's again nearly more than 4.5 times. So the kind of growth this company has given. So, and this is the reason why this stock can be in the list of 5 stocks which can compound every year and give a very good return. Second stock which can discuss is KNR Construction. So as I created in the previous videos also how India is focusing on the infrastructure growth in the next decade. A lot of investment going to happen from the government side, private player side, from government bodies also in different fields. So whichever companies are leaders in the infrastructure sector, those companies will be the prime beneficiary of all those investments which are done by the private and government players also. So KNR Construction is one such company which has a good reputation of implementing projects like roads, highways, bridges, etc. They are into 3 kind of models: EPC, engineering, procurement and construction, BOT and HAM, hybrid annuity model. If you want to know about what these models and everything does, there was a video which I discussed long back of Dilip Buildcon. You can go and watch the video again. There the discussion was completely into what is EPC, what is BOT, what is HAM, and how do we do that, like how companies make these models. From the company's perspective, they have very strong execution report. They have done very good work in the past, and the FIIs and DIIs are increasing their holding in this particular company. So this is how this company is placed. From the numbers perspective, sales growth for last 5 years is 20% every year. Compounded profit growth for last 5 years 28% every year. Stock price CAGR, if you see, every year this company is given 44% return in last 3 years, 28% returns last 5 years, 36% return in 10 years. So we can safely say this company can compound your money at a very good return rate, where you don't need to worry about uh, changing companies or changing investment from one company to other company. And the good part of this particular company is they have a very good control on the debt. So a lot of infrastructure company has very high on debt, and sometimes they default the interest and all those things, so that impacts the governance. But in KNR construction, they have controlled their debt, which is very good compared to the peer group. And this is also a reason why this company is very safe in terms of long term investment. Let's move to third company. Third company. So before we move to third company, KNR Constructions have some charts over here. So you can see year-on-year growth 2018 to 2021. They have doing great. Same goes for profit also. It has been increased where other companies suffered also, but this company is doing good in terms of both profit and sales. The charts numbers shows here how the EBITDA, profit before tax, profit before interest and tax, sorry, and net income, how this changes over the period of 4 years, 2018 to 2021. So this you can pause and read the numbers. We'll move to the next talk. So next talk is APL Apollo Tubes. I already created one video on APL Apollo Tubes where I told how this Jal Jeevan mission by government, investment of 60,000 crores, can impact these companies. And APL Apollo Tubes was one of those companies which will be impacted. You can go back and watch that video also on the channel. So APL Apollo Tubes is a prime player in the infrastructure sector. Why? Because they are a branded steel product manufacturer. So wherever steel is required, you construct a building, steel is required, you irrigation, steel is required, you do any pipe construction, steel is required, you do any gas line extension or gas line reach to rural areas, you need steel products. So APL Apollo Tubes sits right on top of all these requirements. So in terms of company, they have 10 manufacturing units, over 1500 plus products, and they have very good improvement in cash conversion cycle. As I told previously, if you want to understand more about cash conversion cycle, do let me in the comment section. We'll create a video on that. From the numbers perspective, sales growth for last 3 years was 32%. Compounded profit growth for last 3 years is 32% as well. The stock price CAGR, this stock has given 9% return every year for last 3 years. For 5 years given 48% return, for 10 years given 46% return. This is a great compounder for everyone invested in this stock. And I personally feel the infrastructure development in India is going to become even much bigger than what happened in the past. So the return can increase from here for this company, and it is also a big brand. So if you say Apollo Tubes, people know about it, people can identify the company. So this is a very good branded product, and it has also good market share also. One important factor in this kind of companies are that these are capital intensive business. In spite of that, this company is virtually debt free. So virtually debt free means they have some debt, but the cash equivalent and inventory is so high that that debt can be mitigated at any point in time. So this company is virtually debt free. If you see from charts, again the same. So all the stocks what we're discussing here, they have a similar pattern. All these companies are growing every year, both in terms of sales, both in terms of revenue. Doesn't matter if pandemic is there or not, but this companies has done good. So this signifies how strong the fundamentals are for these companies. If you see their chart is here, if you see the numbers from financial year 2018 to financial year 2021, the growth revenue is from 5,300 crores around to 8,500 crores around. Net income is from 158,000 crores, so 150 crores to 360 crores in span of 4 years. It's more than double. So this is a very good growth. Same goes for earning per share also, 6.68 to 14.45 in a span of 3 years. So this is the growth for APL Apollo Tubes. So this is the fourth company what we discussed. Let's move to the fifth company. So the third company is the fourth company. So fourth company is Deepak Nitrite. So Deepak Nitrite had been in news for last 2 years, and for the good reasons. Their fundamentals are very strong. The product is in great demand, and they are making good money in the market. A net good profitable company. Deepak Nitrite still has a lot of potential, and they can still become a multi-bagger after giving a good return also in last around 2 years. When I talk about the company, this company is leading manufacturer of organic, inorganic, fine and specialty chemicals. They have more than 70% market share in sodium nitrite and other sodium related products. The product is used in colorants, agrochemicals, pharmaceuticals, rubber, specialty and fine chemicals. And they have a very good improvement in cash conversion cycle also. So all these companies are focusing on their financials and balance sheet as well, where they want to get money from the market as early as possible for the products. They want to reduce their debt as much as possible. Then they want to improve their ROE and ROC as much as possible. So all these companies have few things in common. Sales growth for last 3 years for Deepak Nitrite is 38%. Compounded profit growth for last 3 years is 111%. That is very very huge number. So every year this company is compounding the profit for by 111%. So more than double. Stock price CAGR, if you see last 3 years, the stock has given more than 100% return every year. So doubling every year your money. So if you invest 100 rupees 3 years back, it would have become 800 rupees right now. This is 8 times return. 5 years 78%, 10 years 61% return CAGR every year. So these numbers are very attractive, and this makes this stock itself a good investment out of this 5 stocks portfolio also. You can choose any one stock if you want to invest. You can choose in a bouquet of these 5 stocks if you want to invest. This all depends on the amount of money which you have or which you want to invest in the market right now. Coming to debt, this company is also virtually debt free. They have some debt, but this will be mitigated easily by their cash equivalent and also by their inventory what this company have. So Deepak Nitrite is a very good, very strong fundamental company, and because of the sideways movement and also the volatility in the market, the stock is available at a good price also, which can be bought now. Around 2000 rupees is the market price right now today when record the video. So you can also go ahead and buy this stock. Let's jump to the charts. Chart wise, this company you can see the growth 1.66 to 2.72, 4.26, 4.38. Revenue has been increasing consistently. Profit also has been increasing consistently. So you can see the numbers over here, the total revenue, EBITDA, profit before interest and tax, profit before tax, and net income. From 79 crore in 2018 to 775 crores in 2021. This is the net income. So it's almost 10 times growth in net income. So this makes this stock one of the best stock in the entire stock market right now. Deepak Nitrite must be in a portfolio if you're looking for a good company to invest and then sit down idle without thinking much what's going to happen in the future. Last company is Aavas Financiers. Aavas Financiers is in the business of providing housing loan. Their market is low and middle income segment in rural areas and small towns. This is a subsidiary of AU Small Finance Bank. AU Small Finance Bank itself is a very good, very strong fundamental finance bank. And since they are subsidiary of a very strong parent company, they have very strong fundamentals as well, and they're very well controlled, well managed company. They have a very good system where they treat each customer uniquely with there's something called appraisal methodology. They don't use credit score and other things which normally used by banks because they target users who doesn't have IT statement and things like that. So this company has their own way of doing things. Sales growth for last 5 years has been 42%. Compounded profit growth for last 5 years has been 55%. The stock price CAGR for 3 years has been 43%, and they have the best in the industry financing margin. So finance margin is the gap at which you take the money, at which you give the money to the customer. So that's the margin what these finance companies make in the middle. So this company has the best finance margin right now in this segment, house financing segment. And because of this, they have a significant increase in their reserves and borrowings. So why borrowing why increasing borrowing is a good sign? Because it's a finance based company. The more they can borrow from the market, the more they can loan out to the customers, and more they loan, the more money they can make out of the finance margin. So this is the reason why high borrowings are very important for any financing company. And reserves are good because the more is the reserve, more money they can finance. So reserves and borrowings go hand in hand when it comes to finance companies. Any finance company, not only about Aavas Financiers, it goes true for every other finance company. So everything good about this Aavas Financiers. Let's go to chart. So chart wise, 0.49 to 1.11 thousand crores, and then same goes for profits also. This is newly listed company. It's listed in 2017 only, then renamed to Aavas Financiers. So this company has been doing good in the profit and growth. The charts and all you can see here. You can see how this company has been doing. You can read the numbers over here. You can pause the screen if you want to read more in detail about the screen. So this was about these 5 stocks what we discussed. And you can, as I told, you can invest. You can choose either 1, 2 or 3, whichever you feel based on your research, or you can go research and everything and create a small case for it and invest on all these 5 stocks. If you want me to create a small case for you, let me in the comment section. I can start creating a small case. I can share with you where you can invest. But before I close the video, you can see a new logo on the slides called Reload Your Wallet. So Reload Your Wallet is a website which was there for last 2 years, but we never updated that. It was a blog based on investment and finances. But so you can also read about investment taxes, all those things in this website. And if you find it helpful, you can share with friends and family who can read more about it. So this website will be updated now slowly over the period of time based on stocks and mutual funds and other investment instruments. So let me know if you think this website will be helpful for you, and content can be put there, and you can always go back and refer to the website also. So thank you so much for watching the video. If you find it helpful, do like the video, give your comment, share with your friends, and if you're not subscribed so far, feel free to subscribe. And thank you so much for watching. Stay happy, stay safe.